Hi everybody. Good morning, and I think this is 2 a.m. my time. Yeah, it's midnight. Um, First of all, I would like to start with my name is Emmanuel. And I'm a forex trader. Um, this is basically me enrolling for the my forex funds trading journal promotion. As you can see this page here, it's about the whole promotion they post on Instagram. Yeah, if you look at it in more details on their website, we can see that it says in order to promote and encourage a healthy trading behavior among all our traders, we carried out a survey to highlight the most important factors contributing to a safe and profitable trading. Keeping a plan and a journal appears to be a key developing strategy. Appears to be key in developing strategies. From 1st of October 2021, all our Phase 1 and Phase 2 evaluation traders who will post their trading journey and journal on YouTube will be eligible to get their free refund after passing Phase 2 instead of after their first profit split. So how to participate: one, you purchase the evaluation, which I did. I'll show you the email in the next page. Document your trading transparently. Post your journal on YouTube at least twice a week, and then as early as you pass Phase 2, get in touch with our team and we will refund your fee. Okay guys, this is apart from the fact that you're getting your refund immediately after Phase 2, this is really a very nice approach. Yeah, it's both helping always is helping the trader, because this is like my fourth, my first one account, and then I think the last one was quite better, but this is like my fourth one. And then one thing I've seen is that journaling has helped. Yeah, I think the last one, journaling, helped me with minimizing losses. Yeah. So when you're journaling, you tend not to make mistakes, and then since I'm posting the journal on YouTube, um it will actually be out there, so it will reduce the tendencies of me wanting to make any mistakes or wanting to overtrade or go outside my trading plan. So basically, this video I'll be showing you guys the my forex funds account I got, and then I'll be showing you how my trading journal is structured. I created a journal by myself on Excel, and then I will show you my trading plan. It's all packaged inside my whole distinct Excel sheet. So first of all, I'll show you guys the email I got. Okay, so this is the email with the account. First of all, I blurred out the passwords and account details because it's all sensitive information, and then I don't want anybody messing up on my account. So I don't know, y'all bear with me. So the next one is to show proof. Okay, this is the account, Emmanuel's account details, and then you can see it's a 100k account. Total trades 0, profit and loss 0, days traded, you see it's 0, phase 1. So it's all, I got it I think about 11 days ago, and then I haven't traded. So I think my first ones told me that once I want to start, I'll start trading next week. So I think by tomorrow I'll send them an email so they can activate their account again if it's been deactivated. Okay, so the next one now, it's the trading journal. So this is like my trading journal. Yeah, my daily journal. 123 forex is like the whole vision I have with my whole forex career. Yeah, it's something I want to do in future. Yeah, so we have the date and time. Yeah, and then like the date and time, and then the details of the trade, and then the psychology. That's basically how I was feeling. I think that's all. So now the date and time, I have under here, I have the trade day, that's like day 1, and then I have the dates, yeah, and then the format, and then the trade number, that's the trade number on that day again, and then the currency pair, time I open the trade, the lots, that's under the details of the trade now, the lots, the SL, that's the stop loss, the TP, take profit, and then time closed, and then profit or loss, then comments or comments through confluence. Yeah, and then on this psychology, I have how I was feeling, yeah, before the trade, during the trade, and after the trade. So this is really um, self-explanatory, and then very how will I put it, very, I don't know, it's the word I'm looking for. I can't get it, but it's like deep. Yeah, it's like very, it's detailed. Yes, it's detailed. Yeah, this explains a lot about the trade. So now the next sheet is my weekly report. So I thought that getting a weekly report is actually nice, because it will help me, to help me know where I'm going every week. It will help me know where, how much progress I made each week, and then I'll keep track of, if I don't perform very good that week, I'll have to go back and then check what's happened exactly, you know. So I have the week number, the dates range, then the number of trades, the wins, losses, profit or loss. That's wins in percentage, and then losses in percentage, then profit or loss, that's in cash, and then in this thing in percentage, then account balance, and then observations. Yeah. Then I think the next one is what, my trading plan. Yeah, my trading plan is quite, it's a lot. Yeah, it's like a trading plan stroke strategy or whatever, but then it just tells the details of my whole trade. This is what's going to be guiding my trading throughout this time. So if I go against it, you guys can hold me accountable, and then yeah. So I'm putting it out there so that anybody that wants to use it can shall use it. And then if you want in depth on it, you can shall hit me up, or comments, puts down your this thing observation in the comments below, and then I'll get in touch, and then we'll know how we'll do it. So first of all, yeah, my strategy combines price action, RSI, and then stochastic, sometimes ICT, that's inner circle trading. I know a bit of it. I did ICT when I started trading, when I started learning forex deep. I did ICT the first time, but I just know how to use them, breakers, and then other blocks, and the mitigation blocks and all. So that's all. But I use them sometimes to get pinpoint entries. So second one is low probability trades get 0.5%, and of accounts, while high probability trades get 1%. That's about my risk management. I think I got this from I think Lambo Rao. Yeah, he's a trader. He said something that one of the biggest problem with traders these days is that most people don't know what low risk trades are, and then high risk trades are, or what low probability trades are, or what high probability trades are. So now if you can differentiate them, you know where to put your money. You put your money where your mouth is. So aggressive entries are considered high risk trades, and thus they'll also get a 0.5% risk. So yeah, starting now, I love the aggressive entries, and then but one thing with aggressive entries is that most times you don't get the whole candlestick confirmation, so the trade will likely go against you. So they are like high risk trades, so to get a 0.5% risk. So always look at higher time frames. Yeah, it's always good to look at higher time frames to know what the market is doing overall long term, and then higher time frames always prevail. Yeah. So once a higher time frame shows rejection candle, engulfing, or a doji candle, wait for a proper confirmation candlestick on the 1 hour before entry. Most of my entries are on the 1H. I rarely do entries on 30 minutes and 15 minutes. They are too like rowdy, so I don't do a lot of entries on them. And then in ranging markets, use RSI and stochastic sorry, I made a mistake. I was combined with candlestick patterns and key areas to make decisions. Yeah, because in ranging markets, you cannot use Fibonacci. Yeah, so you only use RSI when it's oversold or overbought. And then you say candlestick confirmation, you enter. Yeah. Then break and retests, we use Fib golden strategy. It's a strategy I started using the golden ratio strategy. Yeah, where the 0.5 and then the 0.6 are the golden areas, the golden ratio, and then the stop loss is below the 0.7. So if I'll be making a video in depth about that soon, and then posting on YouTube too. Then break and retest use Fib golden strategy, RSI stochastic, and candlestick confirmations as entry. Then chart patterns that I love to trade are the shifting market structure, double tops and double bottoms. And then please, if you don't know what any of these structures are, you can drop a comment below, and then I will get in touch, and then we would put you through. And then one risk to reward RR is the primary target. I think for now, until I pass my forex funds, the both this in stages, once I reach 1 RR, most times I'll be closing my trades, because the markets, I did this strategy, this whole trading plan in December, when the market was like a bit choppy, and then you never know when the market will flip on you, and also, but then it's still January, so might have those characteristics. So once I have 1 RR, I'm going out. But I think on 0.5% of trades, that's $500, risking $500, except I have $1,000 before I'll be leaving the trades, except once it reaches a significant area or something. But if it doesn't, I'm going to leave it till it reaches $1,000. Then once account is up to 4% profits, increase risk to 1.5% for low risk trades, and then 0.7 for high risk or low probability trades. It's scaling up. Then when we have a break and retest and structure comes before the 0.61 to 0.61, the 61.8, but in the golden ratio, enter but use the risk for low probability trades, since most times price tends to respect the structure more. So when we have a break and retest, and then the market is retracing, and then we have like a structure where it was broken, the structure comes before the 61.8 in the golden ratio, most times the market tends to respect the structure instead of the 61.8, but because it's in the golden ratio, so anyway, it's a low risk buy. So it's a low risk buy or low risk sell, so it's like a low risk entry. So markets will tend to respect it there. So you enter the, I think he said enter but use the risk for low probability trade, since most times price tends to respect the structure more. So no trading on Mondays, even if you must trade on Mondays, should be 0.2%. Yes, this is something, I think Mondays, I've lost a lot of money on Mondays, so lately I've been staying off Mondays. But if it's a must, if I see something that looks tradable, I'm going to risk 0.2%. So always calm down if you're unsure of a trade. Yes, once you are in a trade, only shift stop loss according to the break of structure. Yes, and then once you make daily targets, exit the position and move. Always look at higher time frame. I think I have this up here. Always look at higher time frame. I still have it out here. Once a higher time frame shows rejection candle engulfing or doji, wait for a proper confirmation candlestick on the 1H before entry. I think that was like a duplicate. I forgot to delete it. When the higher time frame and the lower time frame are showing the same RSI confluence, it's going to be strong. Yes, one thing with RSI I know is that once the 4H and the 1H align, it's going to be a huge movement. So RSI divergence are also good to trade. Yes, if you don't know what RSI divergence is, you can hit me up, and then I'll put you through on that too. When price reacts from an area of interest without giving us our entry criteria, that's the candlestick, enter at the close of the expected, at the close of the candle. It was supposed to be candle of the expected market direction, or I still wrote market direction candle. I'm going to explain this, but it would have been better if I explained it with the charts. But what this basically means is that sometimes you don't get the doji candle you're looking for. You get maybe a very careless rejection. It's not like a rejection candle, but then let's say the market was bullish and then it's about to reverse and turn bearish. You get a very careless bearish candle, but then after that you get another powerful bearish candle. So after that second candle, after the close, you enter. That's basically what this point is saying. And then aim for a 2RR. So aim for a 2RR. This is not applicable in ranging markets though. So then my areas of interest include necklines of double bottoms and double tops, structures within the golden ratio. Then let's see, let me zoom. Yeah. Once you see very huge rejection candle on the 1H counter trend, don't make an aggressive entry at the low risk entry areas, especially when the 4H on the 4H there is a doji candle rejecting from an area of interest, or a doji candle that was a stop hunt. Once you see a bullish candle or a strong rejection candle counter trend, check the higher time frame and be careful. One thing, yeah, I think I observed this last time, and then I was asking one of my mentors on AUD. Yeah, we had like the market was in an uptrend, yeah, and then I saw like a huge rejection in form of a retracement. Yeah, you know, most times retracements happen in bit in tiny candles, but then I saw the first candle was a huge one, then the other ones were small. So this whole movement, yeah, broke structure. Like, it did not even respect the structure, it did not even respect, after a retracement you're supposed to have another impulsive move. So now, once this whole strong push happens, you tend to check the higher time frame. On the 4 hour, it was a very clean doji candle, so it was, the market respected the 4 hour this thing movements. So this was basically, this point is saying that anytime I see those type of like strong movements in form of retracements, it's better to check the higher time frames and be sure if it's just a retracement or it's something that is going to break structure. Yeah, so always allow stop loss to breathe. Yeah, never put stop loss close to PL, that's previous low, or PH, previous high, or at the end of a doji candle or a rejection candle, or at a psychological level. Now, all these places I mentioned here, these are like liquidity areas. This is where smart money likes taking liquidity. Smart money like taking liquidity, that's the big banks and then the big market movers. This is where they like taking liquidity. So if you put your stop losses here, you get taken out, you dump to liquidity. So that's the last one. I think that's the last part of my whole trading journal. So this is basically an introduction. By Wednesday, I'll be posting the videos on Wednesdays and Fridays, because I don't trade on Monday. So once I trade on Tuesday, Wednesday, I'll post the video. Thursday, Friday, I'll post a video. So I'll be posting a video, so you can follow the page, and then subscribe and click the bell icon to keep your notifications on when I post a video. You can check it out. Yep, and once you see me going against my whole trading plan, you can call me out and let me know. Okay, that's a wrap, and thanks for watching. Yeah, see you guys in the next video.